Every indicator that we use for trading will have their own limitations, will have their own shortcomings. Not every overbought or oversold reversals, not every divergence signals will be held true. In our trading methods or in our trading systems with indicators, we will a lot of time find false signals and false reversals. It's in our hand to devise methods to refine these false signals and use only the genuine ones. Though it is not 100% possible to remove or filter out false signals, but we can use as much as different indicators or different methods to increase our trading efficiency. It is not a good habit to rely completely on a single indicator for your trading decisions. It's better to use multiple indicators to judge a setup. For example, we could use stochastic oscillator with RSI. Following is a BBTC chart with stochastic oscillator plotted in a separate panel and RSI plotted in a separate panel. In the upper panel you can see price chart is plotted, and I am using bar replay feature of MA Broker to help you understand how we could use RSI with stochastic. You can see RSI itself never works as a signal giving indicator. It will help us understand the condition of a market, but it will never give us signal to buy or sell. Whereas stochastic, along with giving us the momentum level of a market, also help us to figure out entry and exit places. As you know, if percentage K or the fast line crosses above percentage D, it means stochastic has given a bullish reversal signal or it has made a positive crossover. Similarly, if percentage K crosses below percentage D from above, it means stochastic oscillator has given a bearish sell signal or a negative reversal. As of the last bar, RSI is at the level of 38 and stochastic is very near to its oversold zone. Let's go ahead and add some bars. You can see stochastic has given a bullish crossover, but RSI has still not reached oversold regions. So we will avoid this buy trade, and let's go ahead and add some more bars. You can see at current bar, RSI has given us a reading of 26.10 and stochastic has given a bearish crossover, that is percentage K has crossed below percentage D. So this makes an important setup. Let's zoom out of the chart and see the overall market condition. You can see BBTC is consistently making higher highs and higher lows. Higher highs or rising tops and rising bottoms is a characteristic of a trending market. So that means BBTC is in a bull trend. Assuming that bull trend will continue, we can see RSI has reached its oversold zone, which means we can buy the stock at around these price levels, as prices must not go any further below and change their direction to go ahead and make a new high. Now that we know that this stock might go ahead to make a new high, that is a high above the level of 290, we must understand at what price should we buy into the stock. This is where stochastic oscillator comes in. We will buy into the stock once stochastic oscillator gives a bullish crossover, that is once percentage K crosses above percentage D or pink line crosses above the beige line. Let's go ahead and add some bar. You can see as of the current bar, RSI is flat or almost unchanged. Stochastic oscillator has given a bullish crossover. So we will buy above the high of current bar if the next bar was to take out the high of current bar. You can see the next bar took out the high of current bar and we entered the trade at 230. We place a stop at recent swing low, that is at this bar. Let's go ahead and see what happens next. Stop loss revised to this swing low and then this swing low. Add more bars and prices take out the high to go ahead and make a new high. Thus our analysis was right. So stochastic oscillator can be used with RSI, as RSI does a very fine job of giving us oversold and overbought regions. Stochastic can be used to find entry signals to make entry into the market. Our next chart is Castrol Industries, and in this chart we will see how stochastic and RSI can be clubbed together to find entries and exit into market. Let's go ahead and add some bar to this chart to see what happens next. Okay, before doing that, we will zoom out of the chart and see the current condition of this chart. You can see prices are making higher tops and higher bottoms, which is characteristic of a trending market. Assuming the fact that current trend will continue, we will buy into the market the next time RSI reaches a zone of 30 or the next time RSI reaches an oversold region. Let's go ahead and add some bar. As of the current bar, RSI has given a reading of 21.42, suggesting that this script is now in oversold zone and can be bought into. The strategy remains the same. Buy into this stock once stochastic gives us a bullish crossover. We'll go ahead and add some bar. As of this current bar, stochastic has given a bullish crossover. As you can see, pink line percentage K has crossed above beige line or percentage T. So we will buy above this price. Keep a stop of this recent swing low, and we expect prices to go ahead, take out this high and make a new high. Alright, let's go ahead and add some bar to see what happens next. We are trigger into the trade. Stop loss is kept at 406. Add some bar. Prices make a new swing low, so we revise our stop to this swing low. The low is tested once again, and then prices go ahead to make new high. Alright, so stochastic clubbed with RSI works much better to trade into the market. This will also help you stay out of many false reversals that stochastic tends to give, or many false buy or sell signal that stochastic tends to give. You can keep out of such false signals. Buy into the market once RSI reaches 30, or sell into the market once RSI reaches level of 70. taking taking the idea of overall trend. Alright, so we used three things to enter the trade. First, we saw the overall trend. We analyzed the overall trend, which suggested us that this stock is in an uptrend. Next, we used RSI to find oversold conditions, which was presented to us at these price levels, and then we used stochastic to find an entry into the market. Using multiple methods, clubbing them together helps us to identify efficient trading setups. RSI has no signal line, so RSI can be used with stochastic oscillator. Use RSI to find stocks that are overbought or oversold, as RSI does this job very well. Then use stochastic to find an entry.